All right, hello everybody, and welcome to one of FX Evolution's instructional series. So today we're going to be taking a look at how to identify institutional stop hunting, specifically looking at the pound US dollar and probably looking more at the opens of the London Open. So it makes sense that, of course, pound will be very active during the London Open, and it's one currency that I always see stop hunting happen on, and many people can't identify it. Specifically, scalpers, if they're staying on the 5-minute, 1-minute, 15-minute charts, they often won't see these levels and won't be able to take advantage of the opportunity that does arise from recognizing correct stop hunts. So I just want to start off by highlighting a few candles. Specifically, I want to highlight these big reversal candles, and they all look like pretty much bullish hammers or pins, as many people know them. Now, there's one thing that's unique about all three of these highlights, and that is that they happen very similar time, and that is between that kind of pre-London Open to the first 2 hours of London Open. There's a few reasons why this happens, but these are all pretty much prime, I guess you could say, stop hunting times. And this is generally what we do see with the pound US dollar, and it's definitely something you should watch out for. So let's break down the first one. And you'll notice we have some lines here, so we'll look at those soon. And we'll see that we've got this timer on around 8 o'clock GMT. Now, many people will know that around 8 o'clock or 7 a.m. GMT is generally when the London session opens. I am using the Pepperstone platform, so it can be GMT +3. But basically in this first kind of 2 to 3 hours and the pre-1 hour session, we want to be looking for these stop hunts, and we want to potentially be looking for opportunities. So you can see the bullish hammer happened there. We go over to this candle, again, it's at the 8 o'clock. And then we go over to this candle, and again, it's at the 8 o'clock. And we're on the 4-hour time frame here. So if we then break that down to the 1 hour time frame, go across, get our vertical line, notice how suddenly it's at the 9. So the 9 would be pretty much right on that pre-open close into the open of London on the Pepperstone platform. So we've got that right time, that right period for this particular currency pair. So this particular one, obviously, if we go back to the 4 hour, it's in a bit of a short sell, and we can see that for the first kind of 2 hours or first hour, we had that sell off and the market made a new low, fully rejected it, ended up as a bullish hammer. So with these type of things, I don't really see any opportunity to buy, at least until the hammer had closed here. So when the hammer had closed, obviously it shows you momentum change, but you probably would have been in the sell. Similarly to this particular hammer, if we go down, draw down to the 1 hour, again, you're going to see that it's around that kind of 9, 10 o'clock period of the GMT. And again, it was in a bit of a sell. So this is just showing that bullish momentum, could be news, could be just stop hunting from institutional traders. And they basically push to a new low underneath our previous low, similar to over here, take out the stop losses, fully reject it, end up as a bullish hammer. And then for pretty much the rest of that session trading time, we've got bullish momentum until it hits these moving averages and sells off. So both of these pretty much have given us an opportunity to potentially go long by being patient and waiting for that stop hunt to occur. So I, again, can see why some people would be buying this support, but I don't like to just jump into counter trending at this kind of time frame. I would like to see the London session open and then trade what the market is telling me. And that's one thing we teach here at FX Evolution quite a lot. Now, similarly, we've got a nice bullish hammer coming off here, and I will leave actually that vertical line, go back down to the 1 hour, go across to it, and we'll see the time frame in this case happens at that 10 o'clock, very similar to the other ones, into the bullish, comes straight off the support, and that's what we're pretty much looking for. So whenever this does happen, generally with markets, is often when they're going for an institutional stop hunt, they'll go underneath the previous swing. So notice how it doesn't quite make it under this swing, not quite, but it does come under this one. What I like to do, and what I think is a really big thing that a lot of traders should do when it comes to these markets, is they should recognize that the market definitely could get under this. Let's say you're going long. So the market would definitely get under this point. This is the point of previous support. And I actually like to take it one step further and say, okay, what I will therefore do is I'll check this candle out. I'll take the distance of this candle. So in this case, 26, 27 points. And I actually will place my stop loss behind this candle, but not by just like 1 or 2 pips, but by a percentage of the candle I'm looking at. And by breaking it down to a percentage, let's say it's 15 or 20% extra, you're being market adaptive. And that's something that's very important when it comes to trading, being market adaptive. So that's something that I like to do. And conversely, if I was sitting here on the 4-hour saying, okay, I've seen the stop hunt, they've taken it to the new low off this previous swing. Obviously, there'd be heaps of people with their stop losses behind this point getting a little bit greedy. It's made this low here. I would then take the distance of this particular hammer, break it down to a percentage. So let's say here it's 404 points, so 40 pips. I would then say, okay, let's add 20% extra onto this. So then I would put the stop loss basically a further 10, just under 10 pips behind this wick. And that will make it a market adaptive stop, which will help you combat institutional stop hunts. So I've got an even better example, and that's over at this point here on the 8th of January. I'm just going to move it to the side, this bar, and then bring it back. So this is probably the more common one that we see. So we've obviously got some extreme point pin kind of hammer rejections, but this is a very common one, and it actually scares a lot of people, and it gets a lot of scalpers involved in that pre-market session. So let's say theoretically we were in a short, we traded this to the sell side, or we were interested in getting into a sell in this London session, and then we see something where it starts bulling all the way up here, and we start going, oh wow, we need to get into the long, we need to get into the buy, and we get into that buy, and then all of a sudden it crashes back down, creates a shooting star or another type of pin candle, and then all of a sudden starts selling off for the rest of the session. So this is very much a trap institutional stop hunting kind of method that they use a lot. And they'll push a market very directionally for the first couple of hours, or maybe over the first 30 minutes, and then fully reject that. So we'll go over and have a look at this on the smaller time frames. Here again, 8th of the 1st on the pound US dollar. Here we are. Again, that 8 o'clock into 9 o'clock. See how the breakout happens. This would be the session break that a lot of people would be trading and looking for. Also came off that roll reversal. So it makes sense that this would be a point where the market would potentially sell off from. It breaks it, goes up for that first kind of 1-2 hours, then probably some news or something else has pushed it back down. But again, it's most likely a stop hunt opportunity that has done this. They've fully reversed it. And then of course, for the rest of the session, we were looking at sell-offs. So what I like to do really to summarize here on the pound US dollar is I like to wait and see what the market tells us. We don't want to get involved in the institutional stop hunts. We don't generally want to potentially even be trading that if we're a day trader. But what we do want to do is we want to see when they've stop hunted or when they've confirmed the level, we can then get involved, recognize that opportunity, trade these kind of hammers and pin bars and these types of trades, and get some very good, I guess, opportunities and profits from this type of trading. So I really like to wait for the pound to tell me what to do, and that generally comes at the loss of other scalpers who are getting involved in those sessions. And as you build up your confidence and as you start to recognize these sessions more and more times, you will have a greater advantage in the markets. So hopefully that helps everybody today, but that definitely is something that does happen with stop hunts. And if you've ever wondered whether stop hunts or institutions do this, they absolutely do. Start watching London sessions specifically on Tuesdays, Wednesdays, and Thursdays during the week, and you will see some very large spikes. So getting out of today, I would go with the percentages behind candles or percentages behind ranges is very big to help you combat stop hunts. Never do the 1 to 2 pip stop loss. It's a massive mistake that I see a lot of traders make. And of course, wait for the confirmation. So whether that's on the 4-hour or 1 hour, once you get that confirmation on those timeframes and you start to see these patterns occur, then you can get involved in your scalping and day trading opportunities. So hopefully that helps everybody, and we'll see you in the next video.